Good morning, everybody. Good morning. Welcome to the room. I like to start it a few minutes early. I trick you guys into coming in and not being late. Lots of good discussions this morning. Trading is like the cha-cha, isn't it? It's like 2 steps forward, 1 step back, 2 steps forward, 1 step back. Right when you think you have it all figured out, you learn something new. And guys, that's life. That's trading. Just we all know that I'm no good at analogies. Can you guys hear me okay? Um, but when you start school, they teach you number recognition. You don't even get to add or subtract. They say, "Hey, here's the numbers, here's what they mean. This is bigger than that one, this is smaller than this one." Can you guys hear me okay? Anybody give me a Y if I'm coming through. Okay, cool. And then from that basic understanding of numbers, they teach you to add. They say, okay, let's put it together and let's go 1 step further. And then from addition comes subtraction, and then multiplication, and then division, and then you silly math people start doing algebra. And guys, even on the most what seems remedial now, right? You math people are like, oh, algebra's easy. I loved algebra. Geometry was easy. I love geometry. But guys, if you never laid that foundation, you would struggle. You'd never do the FOIL method if you didn't know how to multiply. And that's what this classroom is. It's educational, guys. It's for informational purposes, but it is designed to give you the basics, to lay that foundation, to create recognition, and then you'll begin to move forward a little bit each and every day. Before we get any further, if I have any veterans in the room, happy Veterans Day to you. Thank you very, very much. What is today? Today is Tuesday, November 11th, guys. No news happening, so we're not even going to worry about it. We're going to get straight to the task at hand, and that task is teaching you guys to read your charts, to look at it, to make good decisions based on the advantages that you see. And that is my job in the room, is to help you be able to look at a chart and decide and say, hey, this is good, this is bad, this is what I need, this is what I don't have. And then you get to choose whether or not you enter the market, guys. We're going to use checklists, only 3 rules, only 2 charts, and we're building that foundation, allowing you to learn to read your indicators, to recognize advantages, guys. And these advantages become your trade. 90% of your day is chart reading, 10% of your day is active trading. I still think that 90% is low. You will spend more time doing nothing than you will doing something. And somebody said in the room yesterday that her best days are the days when she seems to take the fewest trades. And I don't disagree with that, guys. And once you learn how to read your charts, you're going to understand 3 very key concepts. You're going to understand where the market is likely to continue. This becomes an entry. You're going to understand where the market is likely to go. This is a great way for you to manage, a great place to take profits, and you're also going to understand where the market is likely to stop. These are called termination conditions, guys, and these are highly visible areas on your charts that could end a trend. You'll see them, you'll recognize them, and this is going to help you embrace the 90%. When we talk about the 3 rules, guys, we're talking about the 3 advantages. And when everything lines up for a trade, all indicators on both charts, we call it a high probability trade. This is what I teach in the room. I teach the highest probability trend trade you could ever take. I teach it on NinjaTrader. We also look at it on TradingView, guys. This is your foundation, because once you can look at a chart and say, I have momentum, my path is clear, let me go define my entry, you have a high probability trend trade. From this ability comes the ability to recognize a medium probability trade and even a low probability trade. You are in control of the entry, guys, and when you know what's working for you and against you, Paul, I got you in 1 second, that's what helps you make decisions, guys. I see these advantages, I choose to enter the trade, it's the best of the best. I see my advantages have gone away, I choose not to enter the trade, or I choose to manage it assertively. And we're putting you in a place of power. The market can't force you in. Only you can make that decision. So Paul, on your 1 minute, I want you to go to trigger lines and then settings, and then right here, it is background above. Whoops, that's not an arrow. Right there, your background colors from settings on the triggers. That's what's going to get you that background. Or I believe that the link I put in the room earlier has it all set up for you. So if you wanted to just save that template, you could use it as well. We're going to take the first hour, guys, and we're going to learn rules. That's really that's the key. Learn the rules. Your rules will describe a pattern. You're welcome, Paul. And happy Veterans Day. Your rules will describe a pattern. This pattern can be proven. It can be tested. You can verify and validate that your trade gives you the potential to win more than you lose. And good morning, all my new people in here. We got some new faces. Orlando, great to have you. Rolo, I think that's a new name. Welcome to the room. Guys, this is your room. Tiger Roy, this is your room. Swathi, good to see you back in here. Guys, we're going to talk about the best of the best. I'm going to give you rules. I'm going to give you checklists. I'm going to give you a way to enter the highest probability trend trade you could ever take. Everybody in the room has the ability to simulate, to practice and to get reps in, to focus on the pattern, and that's all it is a pattern, guys. And you have the ability, and this is really where the magic happens, you have the ability to post in the room and to say, hey, Mark, this is what I saw, and this is what I did, and this is where I did it. Did I do it right? And in the beginning, it's going to be, did I do it right? And as you grow, you're going to say, my rules were met, Mark. This is the right trade. This is the pattern that wins more than it loses. Do you see something that I missed? Why did it lose? And sometimes it's just a great trade that didn't work. But posting in the room is really the first step in getting to where you want to be. Because it's a private session with me. We ignore the rest of the room. We talk about everything that's going on in your chart. And if it's amazing, we're going to virtually high five. Like, we're going to gold star it and say, hey, this is your pattern. Let's repeat what's bringing you success. But more often as a brand new user, and sometimes even experienced users, there's challenges that you didn't see in the heat of the moment. You'll also get that recognition and a way to fix it, guys. I've made every mistake you will ever make, and I know how to fix it. All I have to see is your chart, and I can help you fix it. And then simplicity. I can't stress this enough. Trading doesn't have to be difficult, guys. Trading doesn't have to be 17 time frames and 1 million indicators and 74 patterns. And trading is really as simple as 3 rules on 2 charts. Hey, good morning, Orlando. Nice to meet you. Man, I appreciate that. Orlando, I can't stress this enough. It's terrifying in the beginning to post in the room. I know that it is. Just jump in with both feet. Be brave. And you'll be amazed at how quickly you begin to catch on, how the language becomes recognizable, and how these patterns begin to jump off. It's hard. The first couple days are the hardest because there's so much coming at you. I know that. And guys, cordially invited. If you are new and you're feeling a little overwhelmed, reach out to me. Use my email and just say, Mark, man, I couldn't even think of what to ask in the room. But with a little bit of calm time, this is what I meant to ask. Send me an email. I promise you answers. Promise you answers. Guys, I'm giving you plans, and they are labeled the KISS plan. So this is for TradingView, and then this one is for NinjaTrader. And I just I spread them out so you could see it's only 2 pages. It's not a lot going on, and it wouldn't even have to be that much if I didn't write so much on there. These plans, guys, are stepping stones. This is the beginning. This is the foundation. This is the 70 feet of concrete you're going to build your trading skyscraper on. They're designed to teach you how to read your indicators so that you can recognize advantages. Guys, these plans are designed to optimize your chances of success, which means I don't teach every possible way to use the software. What I do is I lay down the foundation for the best, the highest probability way, and then through study, simulation, class feedback, and practice, you'll ultimately write a plan that suits your needs. Um, so I give you one for TradingView. I give you one for NinjaTrader because we do work on both platforms here. I'm going to lean heavy on NinjaTrader because that's where most of you are. And then the second half of class, we see a little more TradingView. But guys, keep it simple and keep it focused. Learn how to do one thing good. Excuse me. And guys, know the looks. What does it look like to have your rules met? That's where the spreadsheets come in. And again, I'm going to give you one for each plan. On NinjaTrader, it's those 3 rules broken down in green, exactly what they look like in the moment. Every trade is annotated. Hey, here's your first rule. Here's exactly what it looks like. Never mistake that look because that's your first advantage. That's the best of the best. And what you'll do is ultimately you'll take those strong triggers, that clear path and that entry, and then those 3 advantages become your trade. There's a section that's also the client trades. And if you go through these, it's the same pattern over and over. It's the same entry pattern. It's the same advantages. And they all look eerily similar, guys. And these are all taken from the last 4 years. There's ideas on management, patterns that repeat, a place for you to build your plan, and then finally a trade tracking sheet on both of them. And I'll go ahead and put all these in the room for you right now. Your trade tracking sheet is where you and I work together, if you will. Your trade tracking sheet is where when you take a trade, you're going to take that picture, you're going to annotate it, you're going to talk about what you did, and then most importantly, you're going to take the feedback from class, guys, and I want you to put that feedback in the big notes section here. If you get in the habit of doing that, that's your part. Your part is to take the picture, to take the trade, to post in the room. My part is to give the feedback, and when we put these 2 parts together, every morning you can wake up and look at what you did yesterday, and you can say, hey, yesterday, trading with the rules produced a lot of winners. Fighting termination conditions produced a lot of losers, or fighting triggers produced a lot of losers. And you'll notice your thing. Your thing is what's holding you back. And we all have a thing in the beginning, guys. Sometimes it's a misunderstanding of rules. Sometimes it's an inability to sit still. Sometimes it's just nerves because we don't trust it yet. That's okay. Together we identify your thing. And by doing so, it not only sets you up for what you want to focus on for the day, but it also sets you up for what you want to avoid, those things that are causing troubles. You know, if every time I walk up to John Novak and poke him in the chest, he punches me in the nose, eventually I learn to not poke him in the chest. The big chill has made it to lower Alabama. Yeah, Trina, I saw that. I saw that. That's you guys. John was in the 40s this morning, I think. 29, Victor. But then it's right back up to 70s. So I was looking at the weather for southern Georgia, and man, I can't wait. It gets right back to the 70s. So we'll be there in January. Until then, I've got beautiful weather in Texas too. 3 more days. 3 more days. So guys, learn the rules. Practice lots, post in the room lots. You can't post too much, I promise you that. And keep it really simple, keep it really focused. Work on getting good at one thing so that you can ultimately get good at the rest. And now here's the part right here. That's a little Northern love, Master B. You guys can keep it. Nexgen provides the analysis, guys. We give you the rules, we hand you a plan, we give you everything that you need to study. All of the coaching. I literally hand you everything that you need to be successful with the software, but it's your responsibility for finding that success, guys. It's your responsibility to put the work in, to do the repetition, to ask the questions, to get the help. I'm here to help, but guys, you are all my proverbial horses. You have been brought to water. Now it's up to you to drink. So we're going to start with NinjaTrader. It's only 3 rules, guys. I can't stress it enough. Don't make it difficult. When a rule is true, you have the advantage. So it takes 3 rules to create 3 advantages, and that's the recipe for the trade. For the high probability trade, for the trade that typically wins 70 to 80% of the time, for the best of the best pattern, laying the foundation for you to see more. These 3 rules happen on only 2 charts. A lot of us get into it and we see other people, well, they've got 4 charts. They must know something that I don't. Guys, it takes 2 charts. It takes a large chart and a small chart. How's that for technical? Your large chart's a very slow moving chart, guys. It's a broad stroke of a brush. It shows the overall opinion of the market. It takes 1 bar, the first bar on your large chart, to define direction, momentum, and areas, guys. And rules 1 and 2 must be met on the large chart. Without rules 1 and 2 in place, there's really not much reason as a brand new user to even look at a small chart. It's an entry chart. It's a refinement chart. It shows the inner workings of that 1 bar. It shows a pullback, a bounce, a continuation in the perfect trend trade. And we use this refinement chart so that we can really lean on the advantages that the large chart produces, but reduce risk and maximize profit potential with a little smaller, little faster time frame. We use these 2 charts. I will never stop presenting this analogy, guys. Who are you trading with, or who are you trading against? We've all heard, oh, big money, institutions, the 1%, the man, whatever you want to call them. That's the big crowd, guys, and they win. They win more than they lose. They win because they have the money to do what they want. They create trends. They establish the momentum we're looking for. They react at the key areas that could stop a trend. Your small crowd is, I want you to think of them as a small chart, as a small crowd. These are the men and women that still have way more money and influence than you'll ever have, and they create what's called a retracement. Most of you have noticed, if you've ever looked at the market simply doesn't straight line. The market takes a lot of little ups and downs, turns here and there. This retracement is defined as a small movement counter to the underlying trend. These retracements cause those tails on a big slow chart. You're going to be able to pinpoint right where that retracement is most likely to fail, where the small crowd is most likely to lose. And when the rules are met for the high probability trend trade, they lose typically 70 to 80% of the time. We're going to take advantage of that. That's what's going to get you guys in the market. So now we're going to go through and we are going to talk about the indicators that we're using. 39 in Montana, brr. I'll be driving through your neck of the woods Friday, Andy. I'll wave. Guys, areas are on the large chart and the small chart. Areas are lines on a chart. That's the easiest way to think about it. They all have names, and depending on whether it's a big chart or a little chart, they have a different role in regards to the rules. Divergence highs, divergence lows let you know that there's a loss of momentum at a pivot. And that's all divergence is. It's a loss of momentum. Fibonacci resistance, Fibonacci support. Single blue and red lines created from thousands of calculations, guys. On a large chart, these are the areas that could stop a market. On a small chart, these are the areas that could stop a small crowd. You're going to see yellow 1-to-1s. It's a singular Fibonacci. It's a 100% Fibonacci alternate. It can behave as support or resistance depending on the market direction. And then you're going to see also this midband. In the midband, I want you to notice, because we talked this morning about support becoming resistance and resistance becoming support. Guys, when price breaks above a midband, that midband turns green and it may behave as support. And when price breaks below that midband, it turns magenta and it may behave as resistance. So depending on where price is in relation, you'll have a little visual as to whether it's acting as support or resistance. So areas, horizontal lines on a large chart. And then we're going to use triggers. Triggers do most of everything for us, guys. You're learning to read triggers. There's small triggers, 2 solid lines. They're a fast-moving average. They're the same, look, no matter what time frame you're on. And then the large triggers, they're the slow-moving average, and they say the same, no matter what time frame you're on. So small and large, fast and slow. All you need to know is small and large. When they're going up, they're green. When they're going down, they're red. Guys, you're going to use trigger lines. To define the momentum for rule number 1, you're going to use trigger lines to define termination conditions, letting you know when you've reached an area that has the potential to stop or reverse the market. And you're going to use large trigger lines to define your amazing entries on a small chart. So trigger lines show up in everything that you do. And now we're going to break it down into 3 rules, guys, and we're going to break them down individually. These rules are in this order for a reason. Everything starts with momentum, guys. Momentum is the first advantage because momentum is difficult to stop on a large chart. And then we go to the clear path, no termination conditions, because as awesome as momentum is, guys, a termination condition can stop it. So make sure that you're going in order. First momentum, then path, then and only then will I look at an entry area. And once you understand the first 2, once you can define momentum and once you can define path, guys, you really do have the keys to the kingdom. You have the ability to write your own plan. It can be a consistent plan, a profitable plan, because when you have a market with all of the support of the large crowd behind it and there's nothing in the way, it is like a freight train, guys, and it is very difficult to stop. So we're going to do strong triggers first. We're going to break it down. I'm going to give you the visual. And for the brand new users, not for you experienced users, for the brand new users, so for Orlando and for Tiger Roy, and who else is new in here? Let it be yes or no. Let it be strong or weak, guys. Don't look for the shades of gray as a brand new user. You'll outthink yourself. So in an uptrend, when the background is green, or in a downtrend, when the background is red, in order to have strong triggers, the only way rule number 1 can ever be met is if small and large triggers are green, just like the background, or small and large triggers are red, just like the background. And strong triggers is one look. That's it. It is the same look no matter what chart you're looking at. And strong triggers in an uptrend mean that the small have broken above and away from the large triggers. The large triggers are angled up as well. And guys, you can use the visual. It looks like scissors. Looks like scissors that are open. And when scissors are open, you can cut in a downtrend. Smalls below the large, large or wide, space between the 2. That space is what dictates strength. And guys, scissors are open. You can cut. You can get work done. You can make stuff happen. When your scissors close, guys, when your smalls work their way inside of the large, when there is no longer space between, you can't cut with closed scissors. Best you can do is take a stab at it. So the difference between strength and weakness is space between the triggers. That's it. In an uptrend, the space means strength. In a downtrend, the space means strength. When you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. When you have strong triggers, it's the same look that you need to feel like areas have the potential to break. When you have strong triggers, guys, it's going to even cover some of the mistakes that new users tend to make. And when you have weakness, anything can happen up or down. And guys, that's deflating. If you're putting your money in the market and you're saying, well, anything could happen, I guess I'll risk $1,000. It just doesn't even make sense. You'd never run your business like that. With weakness, the market tends to reverse from the middle of nowhere. With weakness, key Fibonacci areas tend to hold more often than they don't. So when we're talking about momentum, we're talking about separation between the small and large on the most current printing bar. And guys, can you give me a why if you see that there is no separation, that there is weakness? And because there's weakness, I can't say that the odds are favorable for the market to continue up. And guys, it changes throughout the day. You may get strength down, you may get strength up. There's weakness right at an area, and look at the big untradeable bounce. There's weakness right at an area, and they're trying to push lower. And guys, it either is or it is not. Let it be that simple. Because once you can identify momentum, you are halfway through the large chart goodness. Now we got to make sure that there's nothing in the way that could stop that market. We got to make sure that there's no termination conditions. And guys, the from the manual definition of a termination condition is a Fibonacci-based indicator that could stop the market, that may reverse the market, that may create an untradeable bounce. And all it is a horizontal line on your large chart. It can be a divergence high, a divergence low, Fibonacci support, Fibonacci resistance, yellow one-to-ones. There are no lines more important than the other. They can all stop the market. And we're going to do two things. I want you to remember the large crowd makes decisions right at these key areas. And guys, Fibonacci works because Fibonacci is created from what's already happened. So they've already respected that area in some regards. So the first step in defining a termination condition is allowing the large crowd price to reach the area, whether it is Fibonacci resistance or whether it is Fibonacci support. When price reaches resistance, when price reaches support, all you have to do is count triggers, guys. If none of your triggers, both small, both large, remain below resistance, termination conditions, Swathi, are from a large chart. Rule number 2 is defined only on a large chart. Yep, but only on a large chart is where we're defining termination conditions. The small chart's nothing more than an entry chart. And your small chart and your large chart, because they're different time frames, because they're different triggers, there's very often times where the large chart says an area has the potential to break, but the small chart doesn't share the sentiment. So we're going to let the large chart lead the way. Does that make sense? Momentum and path come from the large chart. And if the large chart reaches resistance, if all 4 trigger lines remain below, it's a termination condition. And if price reaches Fibonacci support and all 4 trigger lines remain above, that's a termination condition. And that's what it's going to look like in the moment. Price reaches Fibonacci resistance, all 4 triggers remain below. Guys, that's it. That's your termination. Rule number 2 is not met. Absolutely no trades into the area. And if we go through, price has reached a divergence high and none of the triggers have broken. And so far that market has ceased to go up. And price reached Fibonacci resistance and none of the triggers broke. And look at the giant push down. And then Fibonacci resistance, divergence lows, Fibonacci resistance. So guys, you're going to know about these spots on a large chart before you ever get there. That's how you define a termination. It's one phrase. Price reaches, where are my triggers? All 4 below, absolutely no trades. Are you good with that? And then Swathi, I do want to show you, based on your question real quick, on your large chart, I'm going to show you how the fibs work. On your large chart, you will have Fibonacci areas from the 5-1, which is your entry chart. You'll have Fibonacci areas from the 13-2, which is the large chart. And you'll also have Fibonacci areas from a 21-3. So you have 3 separate time frames worth of Fibonacci, and each of them is capable of stopping the market. One-to-ones are capable of stopping the market. Divergence lows and highs are capable of stopping the market. So Swathi, you don't even have to look at your small chart for termination conditions. You can let the large chart define it because all of your time frames are on it. Does that make sense? And that takes the pressure of having to look back and forth. And thank you for posting that in the room because I think that's a good little lesson there. So no triggers, no trade. That's easy to remember. Guys, areas break all the time, typically with momentum. And this is what it looks like. So I want to go through the process of an area breaking. So this would be support breaking. And price comes down, and the sellers are in control, and everything is going down. And then when it reaches Fibonacci support, you go through the method. Hey, price reached Fibonacci support. All of my triggers are still above. I choose not to trade. Now, it's easy to say, but market could break, right? But guys, in the moment, all you see is price reaching support and absolutely none of the triggers are through. And you'll know without question with a little bit of study that it's more likely to stop the market than it is to just break. And when price reaches an area and none of the triggers break, guys, it's not the one time that it does that we're excited about. It is it's the 10 times that it doesn't. So when we're looking at price reaching an area and none of the triggers have broken yet, sit on your hands for a minute. Wait for the reaction. Wait to see if it bounces. Wait to see if it reverses. Wait to see if it breaks. And then as it breaks, you're going to see it with the momentum, guys. And we're still counting trigger lines. Once price reaches, we are done with price. It's 100% based on the triggers. When your small triggers absolutely smash through the area with momentum, guys, this is what it looks like when an area has the potential to break. It's not broken yet, but the potential is there. And with all that momentum, guys, you're going to find a lot of opportunities with this look. If you really want to make it the best look, if you really want to have the highest chance of that area breaking, you're going to let 3 of the trigger lines get below support. Now it has the potential, and with that momentum, this is actually the second trade on the NinjaTrader KISS plan that I give you. But an area is not considered broken until all 4 lines of the triggers, both small and both large, not price, triggers, get below Fibonacci support. And when all 4 triggers get below Fibonacci support, now the area is broken. Now the path is clear. And guys, your path will remain clear until you reach the next line, and then you go right back to number 1. But once an area breaks, support typically behaves as resistance, guys, and you're going to see that the market loves to come back and test it in an uptrend. Down here, price reached support, absolutely no triggers broke, and I want you to see it. You got 4 bars worth of try, but the trigger said that it's not breaking. The market goes up, it reaches Fibonacci resistance. All of you brilliant people in my classroom say, where are my triggers? With 4 trigger lines below resistance, guys, your highest chance of success, the easiest way for you to have longevity in this game is to sit on your hands, do absolutely nothing, and wait for the reaction. And it's either going to bounce, they're going to fight, it's going to reverse, or it's going to break. You'll never know what it's going to be. If you are already in a position, you may choose to hold through it with that momentum. But if you're not in a position, it's better to at least give it the potential to break. And that's when 3 triggers smash above. You've got all that momentum. Guys, this is your second trade and probably will be the majority of your trades. And then finally, when all 4 trigger lines get above resistance, resistance is broken. The path is clear. The path remains clear until you reach the next line of resistance. And guys, resistance behaves as support when it's broken. Is everybody good with that? And it really is. It can be that easy. Price reaches the divergence high. They still haven't broken it. And we've been talking for the last 4 or 5 minutes. Once 4 trigger lines get above resistance, resistance behaves as support. Does everybody see how the market came back, tested Fibonacci support, the triggers remained above, and it continued up? When an area breaks, it reverses its role. Price reaches Fibonacci resistance. This is what I would consider to be an untradeable bounce. And if you traded directly into that area, you probably lost. 2 triggers through support. It had the potential to break. The colors even changed. But it's not the best look of potential, and sure enough, it doesn't break. And the market heads up. 3 triggers through resistance, but no momentum, pulls all the way to support. None of the triggers break. Giant untradeable bounce back to resistance, and then it continues down. And guys, you can go through and you can take pictures of a large chart and just see how often rule number 2 keeps you out of losers. Look at that, divergence high to the tick, support to the tick, absolutely no trades. And guys, you're going to find that rule number 2 frustrates the ever-living snot out of you, because there will be times when your path isn't clear because areas are stacked. because you have multiple fibs, because there's fibs one-to-ones divergences, guys. This is 90% of your day. I can't stress this enough. This is 90% of your day, doing nothing. But there's good news. The futures markets trade billions hourly. The S&P typically exchanges $174 million a day. The NASDAQ market typically exchanges $269 billion a day. Million, excuse me. Guys, $400 a day consistently. That's it. $400 a day consistently times 252 trading days is 6 figures. Most of you come into futures believing that you have to make $1,000, $2,000, $3,000 a day to be rich. Guys, you can take $400 a day consistently, and then you can mirror it. The same 400 on 10 accounts, have the mirrored accounts execute, and turn that $400 into $1 million. And this is hypothetical, guys. This is just basic math. So you don't have to be in every move. You don't have to be the first one in. You don't have to be the last one out. Guys, the easiest trades that you will ever take, and this is one of my favorite pictures, the easiest trades that you will ever take will come from a termination condition that reversed the market, will have odds favorable momentum, will have room to trouble, and you will pinpoint using rule number 3 exactly where the market is most likely to bounce and continue with the trend, with the momentum, with the direction, guys. And with a little bit of patience, you're going to find it pretty effortless to find $400 to $500 a day. There's no doubt in my mind. So we have to define entries now. Are there any questions about momentum? Are there any questions about defining termination conditions? You know what? Let me give you a little cheater picture here. I take 1,000,000 pictures, guys. I encourage you to do the same. I'm going to give you this picture in the room. If you're a steal it and save it kind of person, this is a good one to steal and save. Price reaches, 0 triggers, it's red, nothing to do, sit on your hands, relax. You don't have to be a part of that. 2 triggers through, sit on your hands, relax, it's not your best look, hang out. Something's going to happen, you don't know what, why not wait for the edge? 3 triggers through, hey, now we're in yellow, it's caution, it's only potential, but there's a lot of opportunity, just has to be managed assertively. And then finally, all 4, you should be chomping at the bit to define your entry, guys. And that's what we're going to do right now. And I'm reminding you, this is just a pattern. What you look at on your screen is going to be the exact same every time you take a high probability trend trade. So much so that the language that describes entry will have you calling your shots long before it gets there. You're going to use a limit order to buy or sell a pullback at an area inside of triggers, which means you're going to use a limit order. That gives you the ability to wait for the market to come to you. You're going to use that limit order to buy or sell a pullback. That little retracement created by the small crowd when everything on the large crowd says up. You're going to wait for it at areas, at fibs, at mid-bands, at yellow one-to-ones, because the same way they can stop a trend on the large chart, they can stop the small crowd on a small chart. But here's the most important part of the phrase. I'm going to use a limit order to buy or sell a pullback at an area, and guys, I want that area to be inside of triggers. On your small chart, on your 5-1, there are 2 sets of large triggers. There's the smooth. These are from the 5-1. These are native to the 5-1. You'll compare the small triggers against them to define momentum. There's also these stepped triggers. They're not your real triggers. They're your step triggers. And these are the large triggers from the large chart, just superimposed right on your small chart. And guys, there's this gospel truth called the regression of the mean. You mathematical geniuses will understand the phrase. And price returns to moving averages. They're just slow moving averages. And because price returns to moving averages, you'll use them to define exactly where the retracement is most likely to go. And because areas inside of those triggers are where continuation happens more often than it doesn't, you'll know exactly where the market is most likely to bounce and continue with large chart advantages. And guys, the tighter the triggers are, one on top of each other, the smaller the range, the lower the risk, the higher the accuracy. So favorable large triggers defines two large triggers riding piggyback like two snakes. That's your best of the best. But it's not the only, it's just the best of the best. So let's define the pattern and the steps into it, guys. When the large chart rules are met, when everything is up, when life is good, the path is clear, the momentum is strong, I can't beat that horse hard enough, guys. Your job is to wait for the reversal bar. The reversal bar on the small chart signals the beginning of the pullback, the fight from the small crowd. You will be able to define precisely where that retracement is most likely to go. Somewhere from the top of the trigger lines to the bottom of the trigger lines. This is your retracement zone, guys. But the market is most likely to bounce and continue in the direction of the trend from an area inside of triggers. So when you type it out, guys, your magic phrase, if you remember this, you'll call your shots. I'm going to buy a pullback at an area, and then all caps, guys, every time you do it, inside of triggers, because that's where the magic happens. And here's the cool thing, is I know that the market, if this is going to be a winner, is most likely to retrace to the bottom of the triggers. And I know, hey, good morning, Justin. Good to see you, man. I know that the market is most likely to bounce from the areas inside of triggers, which means that if I get through all the good stuff, my advantage is gone. If I get below the retracement zone, if I get beyond the areas most likely to create a bounce, your initial stop will be placed 4 to 5 ticks below that triggers, right where the market shouldn't go. Once you get below the advantages, rule number 3 is no longer met. And if rule number 3 is no longer met, I don't want to be in that trade anymore. That's where the market should not go. Now here's how you're going to define your entry though. Because of the large chart advantages, your entry will go a tick or two above the highest point of support, closest to the reversal bar. And guys, this is where the magic happens, whether it's an uptrend or whether it's a downtrend. Everything begins with a reversal bar. You can define where the pullback is most likely to go using triggers. You can define where the market is most likely to bounce and continue using areas inside of triggers. You will activate a limit order below the lowest point of resistance, closest to the reversal bar. Anything beyond the triggers is where the advantage is gone. Anything above those triggers, rule number 3 is no longer in play. Guys, your initial stops will go 4 to 5 ticks above those triggers. And if the small crowd can push through all the goodness that stops it more often than it doesn't, you will take a loss. And you'll take a small loss because it's pretty precise. But guys, anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. So it's not about whether the trade wins or loses, because you'll never know whether it's going to win or lose. It's about whether or not you executed the method. Did I have momentum? Absolutely. Did I at least have the potential to break? Without question. Did the market pull back to an area inside of triggers? 100%. And it never went where the market shouldn't, guys. This is your pattern. This was taken at 2:25 p.m. on the 6th of November. I want you to see this. This is the momentum and the potential to break. This is a pullback directly to an area inside of triggers. This is the exact same pattern from 2021. This was presented in the room in 2021 and I stole it because it was so stinking good. I figured you guys might want to come back and study it. The exact same pattern from 2022. Guys, trading is patterns. The market has a memory. Once you learn the pattern, you define the entry. You know exactly where your stop should belong. And when you have the perfect trend trade, guys, you can say it's most likely to get to that next area. So that is the high probability trend trade. You can study it. Man, they still haven't made it through the termination condition. If you scroll back and you see I'm going to circle it right here. I want you guys to see this. Momentum, potential to break. Does everybody see the tail right there? Let's go see if that fit the rules for entry on a smaller, faster chart. This is how you can study. You don't even have to take a trade. Scroll back and find that circle. And if that circle is a pullback to support inside of triggers, well, that's your pattern. And guys, I don't know if this one would have gotten you. If you were 2 ticks above, you probably got long. And all that momentum took you to the next key area. Do you guys see it? You don't have to be in a trade to learn this pattern. You just have to say to yourself, I'm going to look for momentum. All right. I'm going to make sure that the path is clear, or at least has the potential. And if I see those two things, I'm going to circle the tail. I don't trade the tails, guys. What I trade is a pullback to areas inside of triggers. And this is, ta-da, the pattern that repeats itself every day on every market. I don't care if you're trading stocks, if you're trading futures, if you're trading crypto, doesn't matter. It's just a pattern. Are there any questions? That's your high probability trend trade, guys. And once you can see that one, it opens the door for everything else. Once you can see those 3 advantages, it opens the door for everything else. And now we're going to talk TradingView. Go a little quicker on TradingView. There's not as many of you. If you need help with it, let me know. Post your pictures. We'll talk. Guys, TradingView, indicator-wise, is the same as NinjaTrader. The exception is TradingView doesn't have fibs. TradingView has zones. There are free versions, which are okay. And then there is a company called ChartPrime that produces some really crazy accurate zones. I pay $50 a month for them. If you're evaluating the software and you need the free one while you evaluate, let me know. We'll get it for you. I never regret that purchase. The other thing that's different is the time frame on the charts. So dynamic Renko bars are very smooth. Dynamic Renko bars have a certain pattern. In order to create a reversal bar, there's a certain number of ticks. In order to create the next bar up, there's a certain number of ticks. And guys, it's a very smooth look. TradingView uses minute bars. Minute bars might be new to some of you. This is actually what most traders tend to use. And minute bars are nothing new to Nexgen. There is a trend trade from the 2004-5 plan. When the market pulls back to an area and you enter on a close below the triggers. And guys, this has been consistent for the last 20 years. And now that we've added TradingView in the mix for the funding company, you're going to see it. So there's a 15-minute is the large chart, the big chart, the large crowd. Guys, the 15-minute is so stinking slow. You can have a 100-point move in 15 minutes. You could go make a sandwich. You could walk the dog. You could text your wife, come back, and that bar is still printing. So we're going to use it to define direction, momentum, targets, and terminations the same way we let the large crowd lead the way. But it is so slow that I've created a workspace for you guys that gets rid of the large triggers. Because you don't need them, too slow, and it gets rid of the background color, because if you are focused on only going the direction of the background color, you're going to miss a lot. You really will. So small triggers only, and then all of your indicators, and then your 1 minute defines immediate strength, guys. This is where you're going to define entry points. I want you guys to latch on to that immediate strength, guys. Strong triggers is immediate strength, and on a 1 minute bar, there's a lot of giddy up there. We're going to use that concept for entry. But first, this is how you read a large chart. You will always read a large chart like this. There's very little deviation, and it all starts with direction, guys. Your small triggers on the large chart are either going up or down. This is where I feel like I'm being such a smartass, but if you're good with down and you're good with up, you'll never have a problem with direction. Guys, there will be times of transition. There will be times when triggers are transitioning from up to down, from down to up. I think I took a picture of it this morning. I take so many pictures because that's how you get smart. There will be a time where you will see flat triggers, and darn it, I don't know. There it is right there. When they aren't really up or down. Guys, when they're not really up or down, and you can't decide, the large crowd can't decide. This is typically one of the best times to do nothing. So let them be decidedly opened up, like a shark about to breach, or like a, I don't know, a whale diving down for krill. Let's keep it oceanic. And once you define direction, so here we're up, you're going to ask yourself the ever important question. Where is the current price in relationship to the triggers? Guys, remember, this is a 15-minute bar. And price during one bar can be in every location we're about to talk about. So we're going to look at the most current highlighted price. It's either left of the triggers, as it is in this picture. There's your triggers. It's either right of the triggers, or it's inside of the triggers, and they all have names, and the names will define the momentum and set you up for management, guys. So if you are left of the triggers, you are on the strong side of the triggers. This is the best of the best. This is warm fuzzies, sunshine, and unicorns, guys. This is where 1 minute areas are most likely to break, not guaranteed to break. It's not a free pass. You still have to look at them. But this is where you're typically going to see the bigger moves when there's room to large short targets. If you are right of the triggers, this is the weak side. There's that word again, weak. You're still looking for a long trade, guys, but 1 minute areas have a higher chance of creating a bounce that pulls you out of a position than they do breaking. So this is where your management is super assertive. When I get to that 1 minute area, I'm out. I'm done. I'll wait for the next trade. And then if you're neither strong nor weak, you're in transition, guys. And transition is kind of that, I can't wait to take a long trade, but when I get to trouble, I'm probably going to take half my position off. I'm going to get to break even, hoping areas break regardless of where price is one of the biggest source of losers for users. So the final question is making sure that you have room, guys. Do I have room to targets? From where I choose to enter, do I have room before I hit something solid on the big chart? Do I have room before I hit something solid on the small chart? Those are your first two rules. So is everybody good? First, it's direction, then defining momentum based on where you are currently in relationship to the triggers, lets you know exactly how you're going to manage the trade. And then it's room to targets. Direction, momentum, and path. That should sound familiar by now. If you have room, the only trade I'm going to teach anymore on TradingView is the trend trade. There are more ways to do it, but this is the easiest, the highest probability. And it starts with the 15-minute not trading directly into areas. This is your checklist for entry. So if the 15-minute is not trading directly into areas, then my 1 minute has to not be trading directly into areas. Clear path, guys. Number 3, I will buy or sell a pullback at a 1 minute area, at a zone, at a 1-to-1, or a mid-band, and with the close on the weak side of the small triggers. So it's not just jumping in at an area, it's not waiting with a limit order, guys. It's literally allowing the market to pull back to an area, to a mid-band, to yellow 1-to-1s, to a zone, and then waiting for the up bar that closes on the correct side of those small triggers, that closes on the weak side of the small triggers against you, because that's where reversals come from, guys. And if you are still on the strong side of those small triggers, that market is more likely to push down than it is to go up. Does that make sense? It's not in at the area. It's not in with a reversal bar. It's in with an up bar, that reversal bar that finishes on the correct side of the triggers. In a downtrend, strong side, room to targets. Guys, the moment those small triggers roll up, you're looking up higher. The moment those small triggers roll down, you're looking lower. Whoops. And when you get to the areas, when you get to the zones, when you get to the mid band, you're not just jumping in. Guys, look at this. We hit the mid band, and then it's still there, and it's still there, and it's still there, and then you get a down bar that closes on the correct side of the triggers, and that's when the market tends to go in the direction of the large chart advantages. So guys, this trend trade is only the first trade, and there you go, they finally break. This trend trade is the start. It's the first. It's the primary. And with the triggers down, there's an area, pulls back to the mid band, pulls back to the zones, closes below right there at 0725. You've got 9 points to get down to the next area, and from the strong side, that area absolutely smashed down. Did anybody catch that? Someone going to show me a picture? I hope so. That's a pretty trade. And guys, it's just rinse and repeat. The patterns are the patterns. The entries are the entries. And then once you define your entries, guys, great entries create very manageable trades. Great entries make it easier to get the most out of a trade. They have the lowest risk. They have the highest chance of success. So as we go into the second half of class, that was good. We got through it. I want to share this with you guys. So Tiger Roy, who else? Swathi. Who else is in here? Rollo, new name. Orlando. Guys, let's make that bigger. The key to everything that we do in this room is building a foundation. I'm your foundation guy. I'm the guy that helps you learn to read indicators. I'm the guy that helps you see these advantages so that you can make good decisions. You're going to build that foundation. You're going to keep it simple. You're going to focus on advantages, guys, and then you're going to grow a little bit each and every day. You are not stuck. Day 1, day 2, day 3, day 101 is just parts of the journey. So for you new users, I blanket very conservative rules. A recognition of advantages. I hand you a solid plan that optimizes your chances of success as you learn to read your indicators. I don't call trades for you. I don't tell you when to enter trades. Guys, I'm here for educational purposes. So for all of you new users, it feels like all termination conditions are bad. And for the brand new user, not having momentum is the kiss of death, guys. And areas beyond the large triggers for entry, it's horrible, right? And guys, these blanket rules are in place to increase the likelihood of success. Confidence comes from the memory of success. They're not always bad, but until you have experience to know when to use exceptions, it's just safer that way. And guys, this is literally an email that I had to reply to somebody who took it upon themselves to become the trade police in this room. Just completely put out that people had grown with the software and found more ways to make money. So just like anything, the more time you spend with it, the more you'll see. Guys, this opens doors for you. But you've got to learn the process that yields results. The idea is that Nexgen, hey, good morning, Cap, that the very simple plan, the basic plan, the one that optimizes your chances of success is literally all that you need to find success, guys. And if you keep it that simple, if you're okay not looking for all the trades, you can find an extraordinary level of success as a brand new user. But write it down on a piece of paper. I'm going to grow. I'm going to see more. I'm going to do more. I'm going to find more, guys. And the further you guys go from simple, the longer it tends to take you to find success. And then a lot of you right now are in the point where you found success with simple, that you really focused on the best of the best. And you couldn't believe how easy it was to make money. And then you started deviating. You started saying, well, if I can make this great money the easiest way possible, surely I can add some complication to it and make even more money. And I think everyone in the room will tell you that that's rarely true. Finding more, taking more trades doesn't necessarily produce better results. Question everything, guys. I want you to learn, but I also want you to give yourself a little bit of grace. If you are brand new, allow yourself to be new. Give yourself permission to make mistakes. Give yourself permission to take the wrong trades. Give yourself permission to screw it all up. And we'll take the journey together, where you post in the room and you say, hey, Mark, this is what I did. This is what I saw. This is where I entered. There's the language. I took a pull back to an area inside of triggers. Let's talk about it, Mark. And I'm going to say, wow, great recognition of strength. You define momentum. Great understanding that it's only the potential to break. Thank you for identifying your termination conditions. And I noticed that you entered right at the area, right in the retracement zone. Absolutely beautiful. What a great trade. I'm so glad you won. Guys, your annotations serve as a recipe for success. They also point out where you may have made a mistake. And when you post in my room, I'm going to see your mistake, guys. When you're taking this trade, you are adrenaline fueled. After you have a second to calm down, to breathe, go back and annotate. A lot of times you'll catch the mistake that you made as a brand new user, but if you don't, that's what I'm here for. Don't hide losers, guys. Tell me what you saw. Tell me how you read your charts. And most importantly, share your losers, because losers are where we grow. Making mistakes is better than faking perfections. I love this. I don't know who Kushandu Wisdom is, but when you post in my room, it takes me approximately 5 pictures to know what you're doing well and what you need help with. And then we'll work together to formulate the plan to get you the help that you need to get you on the road. Guys, did you notice how even though the 15-minute chart was clear as day, the 1-minute chart said absolutely not, don't do it, you don't have room, why are you looking for a trade? And if you went short, guess what? That's an avoidable loss. That's money that should have never come out of your account. And then off it goes. So I'm going to take a break because I'm old. I need to refill my water. I'm going to open up the S&P for you guys real quick so that you can see it. When I come back, I'm going to click on all the pictures that were presented, guys, and every one of them. We will go back to momentum, path, and entry. You new users are going to see some pretty creative ways to do things. Because once you understand momentum and path, there's so much opportunity. So I'm going to set myself up here. And because I see a trade already that's missing one. And I want you to remember that the absolute best of the best, highest probability means that you have momentum, path, and entry. It's not the only trade you can take. If one advantage is missing, it's medium probability, guys. This is the majority of your trades. But you have to know these 3 to be able to recognize it as medium probability, to get your management hat on. Same with low probability. And I refuse to be the trade police. I won't do it. Can't make me. Don't want to. I'm just going to do the chart read. So go stretch your legs real quick, guys. Go grab a snack. I'll be back in about 5 minutes. When I come back, it is chart reading. And then we'll go to the live market and we'll look at it and we'll read it and we'll say things. This is still calculating. But there's 2 triggers through with momentum. That area has the potential to break. Sure does. But divergence is a loss of momentum. And if I'm relying on momentum to break that area, my chances just went down a little bit. And we'll see what happens. Back in 5, guys. Go stretch your legs. Just want to know, did anybody hear me when I said divergence with only the potential to break is the biggest killer of the potential to break trade? So for you new users, guys, this is a great insight into how we do what we do and why it's so imperative that you always go back to those three concepts. This trade had momentum without question, without hesitation, smalls above the large, larger wide space between the two. Does everybody see it? And we're talking about when this bar printed. That is the greatest momentum look ever, guys. I teach it every morning. And because only two triggers are through, I don't have a clear path. I can instantly say one of my advantages are gone. And now, guys, when you talk about an entry area, if you learn the language, pull back to an area inside of triggers, you could say, well, Mark, I can define an entry area 2 out of 3. That's medium probability. I'll take it and manage it. Is everybody with me so far? I want you to see how life doesn't have to be difficult. It can be so if-then. Does everybody remember, and probably nobody does, divergence is a loss of momentum. 2 divergences is even more momentum gone, guys, and you can literally watch your perfect trade disintegrate right in front of you. So when we talk about the KISS plan, that's for trading view. When you talk about the KISS plan for NinjaTrader, guys, that potential to break trade says 3 out of 4 triggers because that's your best chance of success. It says no divergence because that's your best chance of success. It says even from a strong top or bottom, a termination condition that reverses the market because that's your best chance of success. Everything that I teach in the morning, guys, revolves around optimization of you getting the absolute most out of everything you do until you have the ability to do it differently. So lean heavy on the idea of momentum, path, and entry. Lean heavy on the idea that you don't have to be in every trade, that it's not mandatory that you take every move. It's not imperative that every tick becomes your tick, guys. There are easy trades, and then there are low probability. I kind of hope this works out trades. So I'm going to go through and I am going to open all of these, and I don't think Wayne is back yet. And I think I'm just going to have to get Wayne in the habit of holding his posts until he's going to be in the room. But we'll see. Couple from Pete here. Almost there, guys. So how are we doing so far, new folks? Orlando, how you feeling? I know day 1 and 2 is a lot. There's no doubt in my mind. There's a lot coming at you in the very beginning. You guys feeling okay? Language becomes easier after a day or two. Patterns begin to jump off the page after a couple days. Really work to keep it simple. And it does get easier every day, and almost everyone in this room will tell you that their first week was like drinking from a fire hose, and then it just all falls into place. It really does, but don't be shy if you need some help. All right, Paul, 15-minute down, transition, clear path. It's a good-looking large chart. Perfect read. Small chart, 1 minute close below the small triggers. Perfect stop, keeps you safe. I love it. And then you just didn't believe it. Lots of info to process. It is. Good. In Orlando, it really is. It's the same thing every day. The repetition is there every day. My first hour is exactly the same. So eventually, you just hear it so many times that it sticks. Now, guys, this is a great lesson. And I want you to see something. This is turning the golden goose into fried chicken. The large chart's beautiful read. Great read, Paul. The entry makes total sense. Close below the triggers. Stop was perfect where the market shouldn't go. And then here's where it went sideways. And this is probably, not guaranteed, I hate to speak for people, but this is greed. This is saying there's nothing in the way. On my large chart, it has to go lower. It's got to go lower. Look at that zone down there. Of course it's going to go lower. Guys, from the transition side of the triggers, you reached a giant green area. Nothing even hinted at getting away from it. And Paul, you hold again, right? So you give it all back, and then it tries again, and you finally said, forget it. I'm going to take my loss. Whoops, minus 310. From 38 to 30. I want you guys to see this. So from 38 to 30, my friends. From entry to the first sign of trouble is 8 points. It's $160 a contract. That's a $320 trade, and all you had to do was get out of trouble. 320 in the positive. Does everybody see that? Instead, we're 310 in the negative. This is the difference, guys, between the people that are finding that consistent success and the people that are struggling. This is hope. I won't even say greed. This is hope, because I don't feel Paul's a greedy person, even though it's a real human emotion. This is defining exactly where the market could stop and refusing to exit. And guys, management's going to be the difference between a really successful trading career and one that you're struggling with. The consistency, there it is again. Long, not a broken area, guys. And it was directly into trouble. And then here it is again. Sit through it and just convinced that a market that isn't going up has to go up. And I love that you made money. I love that you made money, but you traded directly into an area that could stop the market. And when it did, you refused to believe it. And guys, I love it when you guys win these trades. I really do. But that's painful. That is odds favorable momentum, smalls below, directly into trouble, and then sitting through an enormous amount of pain. Can you guys hear me? Give me a Y if you can hear me, please. And it works. Is this how you guys want to get to where you want to be? Guys, this is, I hope you have Tums and Rogaine on your desk, because it already reached the thing that could stop the market, and it did. And we just refused to believe it. 2 times, different time zones. There's an easy way, guys. The easy way is when everything says down and the path is clear. Here's where price breaks below the 1-to-1s and it pulls right back to them. Close below the triggers, and that's the easy trade. That's the one goes down. Hey, good morning, Wayne. Good timing. I got you in the lineup and we haven't gone over you yet. And Victor, this is great. Does everybody see that bar that broke away from trouble? And then it pulls right back to trouble, guys, and trouble holds. Support becomes resistance. And then that's where the market continues down with the large chart advantages. Great trade. Same thing, Wayne, perfect timing. Large charts down. 46.7. Large charts transition. Large chart has room to trouble. Market pulls back to the 1-to-1s, back to the mid-band, and then there's your close on the correct side. Stop belongs above the pivot high. You tried to sidetrack it and they got you, right, Wayne? Man, we've all done that one. There's a spot where the market shouldn't go, right? And you've got to accept the risk. And if you don't, they may come get you. And then, Wayne, you had it where you're like, wait a minute, this is still the right trade. I'm going to get back in and make it back. And you did it wonderfully. And this is normal. It's guys, it's going to happen to everyone in this room. You're going to get into a trade and you're going to hate that number. You're going to hate the risk associated with the trade. I want to address that real quick because I think management's important. And I don't know, I think when I type it out, it just works better for me. So I'm going to type it out. So risky. What's risky? It's not a number. Guys, risk is not a number. risk is no momentum. And risk is trading into areas. And risk is the wrong entry. The correct stop is an investment in the perfect trade, guys. And that investment, it's important that you embrace it, right? Nobody ever said, oh, I've got to buy a car, but give me the one with 3 wheels because I don't want to pay for 4. And I think we all learned this lesson at some point. Guys, risk is a number, but risky is not having the advantages. And when everything is perfect, it makes more sense to keep your stop where the market shouldn't go. And Wayne, it's such a good recovery. Such a great recovery. Nicely done. And I love this. Hold your horses. They can't get through. And Wayne says, I'm just not even going to try. Let them work it out. Let the people in charge work it out. Then you'll look for a trade. I love these pictures, guys. The I'm not going to take a trade because my rules aren't met trade. And then Victor coming to terms with snag it. And then from the termination, small triggers roll up, strong side of the small triggers. And then Wayne, I don't know if you were listening to the conversation this morning. You're just trading into a world of trouble, right? You are trading into an absolute world of trouble. And just because the bar closes above, you're trading directly into a divergence high, or I'm sorry, an HVA. No bar has broken away from trouble yet. You're directly into the divergence high there. And look what happens. It does hold. And look at the giant spike, right? Look at the giant spike. So one of the things that we were talking about this morning, Wayne, was that there's a trend in the room. And I'm not, your chart just is a great example. And guys, do your own thing. There's a trend in the room where you guys are taking that little peak above and saying, well, it got through the area. That little peak above, it got through the area. Guys, it didn't. It didn't. That is where it gets through the area. Look how this happens. The whole bar gets through, and then what used to be resistance behaves as support. Do you guys see it? It's a very basic termination condition concept. Once resistance breaks, these were all support at one time, but when it broke, they became resistance. And guys, these zones are no different. If you're hovering at a zone, that is kind of the equivalent of, we'll get back. If you're just hovering at a zone, that's the equivalent of that large charge fight right at a fib, right? So sort of like the back of the Renko bar clears. Absolutely, Wayne. And then, so Wayne, when can you take that chance, right? When is it like, you know what, I know that it's not totally broken, but I'm going to give it a shot. And you're going to do it when you've got strong triggers on both charts, right? When both charts have odds favorable momentum, when you've got a better chance of doing it. And I like the idea, oh, look, it peaked above, and now it's got to go because I'm on the strong side of the triggers. But the reality is, it's just not there yet. And I'm seeing the pattern a lot just in you guys. And I'm not suggesting that you're doing anything wrong. But one of the things I do is I try to heighten your ability to be successful. And part of that ability is not having to sit through giant drawbacks or drawdowns because the area wasn't actually broken yet. And then look at this one, and even this one right here. And I think you'll like this one, Wayne. And this isn't just for you, man. This is for everybody. Do you see how the whole body of the bar, it opened away and it went up and down, and you have an entire body of the bar above trouble? That's a good break. And in the moment, it got up and that bar started up here. And what happened? It pulled right back to the area and then it continued up. And it's the exact same number, if not better, than I hope it breaks. So I'm going to keep doing a lot of study on this one, guys. But that's one of the things in the moment. And it's hard to see historically because they're 1 minute bars. But I've really been watching that lately on that. I hope it breaks it. And it seems to be doing good things. It's creating a little bit of patience. Slightly better price, but less risky, right? Because now it's clear. Strong bottom, odds favorable momentum. And then Pete, this is another one of those ones, guys. So Pete takes a chance trading directly at the thing that could create a bounce. But with all of the momentum, that's when peaking above tends to work. So that's the Rinko version. Thank you, Pete. That was very timely. If I'm going to take a shot at it, it's odds favorable both charts. Without a doubt. Nice trade, Pete. And then there it is again. With momentum, a little bit of room to get up. Jump the fudge in because everything is up. Out of trouble. Nicely done again, Pete. Organic, let's see, going up, strong side of the triggers, waited for the pullback, the close on the correct side, organic. Perfect. That was you, right? Look at this, going up, strong side, room to trouble, and look how patient he had to be. And then once he gets the entry, egads and little fishes straight up to trouble. Nicely done. It's fun watching you guys come into your own. All right, Miss Jen. Above zone, room. This bar gets through. Momentum style entry right off the top of the zone. And out at trouble. I love it. That's it. It's sliding sideways. And that's something you can only see in the moment. I can't see it historically. Probably broke away, pulled back. Nicely done, Jen. Trouble Ugg. Who is this? Trouble Ugg. I like that. It's up. Oh, I think this is Andy. Broke past. No, it didn't. It peeked its head. You get in on the, as it snaps back, odds favorable momentum, strong side, worked out. There's a way to do it, guys. Everything is screaming. All right. Miss Swathi, are you with me? Are you still in here? She's not. Okay, so let's do this. We're going to do it up anyway. I will send her this picture. So first it's momentum. And guys, we have it without question. There is momentum on this chart. Does everybody see how price reaches trouble and no triggers break? I'm just going to say price reaches a line, all triggers below. This is a termination condition. So the path isn't clear. It is rule 2 not met. And now the entries, guys, this is where I latch on to language a lot. So I'm going to buy a pullback at an area inside of triggers. So if I were going to buy an area inside of triggers, do you guys see how that's my area inside of triggers? Not up here. Big difference, right? And what did it do? It still went a little lower, but it gave me so much more room to go back to trouble. The one-to-ones are on the wrong side of the triggers. The mid-band is the area inside of triggers. And at 43.25, it might have gotten you. But it does go trading directly into a termination with two divergences. And then there's another entry, right? I love it when you guys get paid and you get lucky. And now we're hoping again that that termination condition isn't actually going to stop the market. And this is where you say, okay, if that divergence prints, I probably have to jump ship. Guys, I'm not saying don't trade into areas. That's not my job. But if you're going to give up the clear path, oh, the large chart's ugly. It's straight into a termination condition. But if you're going to give up that clear path, don't you want a better low-risk entry, right? Don't you want those strong triggers? Don't you want those other two advantages to really be solid? I think so. And that's just one of those instances where, let's see what happened. Bum, bum, bum. There it is right there. And there's that third divergence that started it down. So you can trade directly into termination conditions if you want, but if you're going to do it, give yourself the highest chance of success, right? There's an easier trade in there, and it's this one right here. That's a pullback. So I don't tell you guys what to do, but if you're going to ignore one advantage, and that's okay, that's your right. If you're going to ignore one advantage, guys, lean heavy on the other ones. Like if I don't have momentum, I better have a clear path and I have the low risk best entry. And if I don't have a clear path, I better have momentum and the perfect entry. And if I don't have momentum or path, why on earth am I looking for an entry? And that's where I think speaking in terms of advantages pays dividends. Because there's ways to find success where success is limited. And it revolves around going back to the advantages. So when this divergence printed, it never made it back up to her target. I'd love to know if it was a win or a loss. And getting it at 46.50 and out at 48, that's only 1.5 points. Do I want to risk all that money? Look at this, from 46 to 42 is $200 per contract. So $400, about $425 drawdown to make $100. Does that sound like a sound investment? And you'll get to the point to where you kind of piece it all together just a little bit faster, but when you're new, you've got to take these trades. I think everybody should take these trades. I think everybody should go through, and more importantly, guys, and you're killing yourselves if you're not doing it, talk about what you see. You guys that don't annotate your charts, you're trading hope. You're trading in the moment. Could you go back and look at this chart and say that it hit a termination condition? Because if you can, you know to get your management hat on. And can you say that that was an early entry because it wasn't from an area? If you can fix the mistake, but you've got to recognize it. You've got to acknowledge it. And if you don't tell me what you see, I believe you think you had the perfect trade. And I think we can all agree that it may not be there. There's quite a few challenges. So courage for posting in the room. I absolutely love it. But no clear path. Didn't wait for the area inside of triggers. That cut your profits in half and doubled your risk. And then after two divergences directly from a term, this is a hope trade. This is a, oh my gosh, I sure hope that market goes up trade. And it didn't. It stalled out right there, and that was the beginning of the end in the market. So go back to the three things, guys. Let it be easy. Momentum and path. Pull back to the area. Get in a little late, right into trouble, make a little money. Good stuff. I hope that makes sense. And guys, remember, I don't judge you on your trades. I just talk about what I see. I talk about the advantages. And this is kind of the same thing. There's your termination. Even with the momentum, it's less likely to go up. More often than not, that trade will fail. that means that there's not an edge, that there's not an advantage to be had. And eventually you'll get to the point to where you're like, well, they break all day long. I'll wait. All right, Cav. I love it when you guys don't annotate because you know you're breaking all the rules. Strong trending market. It looks like a clear path. No area inside of triggers. Whose is this? I'm sorry. I thought that was you. That's you, Cav. That's you. but let's go through it. And I like this. So let's do the same thing. Whoops, that didn't work out. Let's do the exact same thing we did on that last picture. Let's just break it down to the three things. Let's break it down to momentum, path, and entry. Well, this is a strong trending market. 30 plus bars in the same direction. Guys, anytime you have a strong trending market, you can say momentum is understood. It's going to be hard to stop. All the triggers are above trouble. The clear path is present, 100%. And I want you to see what Cav did. Cav said, I can't define an entry area because there's no areas inside of triggers. So Cav, you waited for the reversal bar up. I love that. Confirmation. But this is where the NASDAQ creates a different scenario, Cav, because your large chart is a 13.2, not a 5.1. These small triggers carry a lot more giddy up. And if you enter directly into them, they may behave as resistance. And that's exactly what happened to you and probably created a little bit of a no-no moment. On the NASDAQ, and guys, this is NASDAQ specific. If you need a little confirmation for your trade, a close on the weak side of the triggers. Cav, it's a game changer. I lost so many trades trading into those triggers only to have them push down lower. But once you get on the good side of them, all of these advantages really get to blossom and take you up to where you need to be. Does that make sense? It's 2 out of 3. And Cav even waited for confirmation. I love it because he knows what he's against. He knows that he doesn't just have to jump in. He changes his approach a little bit based on advantages. I love the trade, Cav. I think that small trigger rule is one that we all have to learn on the NASDAQ. I blew out like 15 accounts doing it, so. All right, can't see the second divergence. Market started down, strong triggers. Triggers get below the fib, same thing, strong trending. Room to trouble. Market pulls up. You get in. On the way down, it's the head fake, right? But then 4 bars over, Cav, is your close below the small triggers, and everything goes exactly like the large chart said it would. So there's the exact same potential entry. Place a limiter just below the 1-to-1s. Did you place it on the way up or on the way down? Because it looks like it hit the 1-to-1s 8 bars earlier. Did you put a stop limit below them? Which is cool because you're like, I'm going to let it go up, and then when it starts down, I got it. You did it on the way up? That must have been flying for it to take all those bars to register. Stop behind the fib, I like it. But this is another one of those good examples, Cav. See the close on the correct side? It's the exact same price without any of the headache. Once these triggers get closer than a bar, you'll begin to see that and recognize that a little quicker. But for me, that was a game changer on the NASDAQ. There's another termination that held. There's another termination that held. There's weak triggers that didn't push. Termination, only 2 triggers, didn't work. Only 2 triggers, didn't work. No triggers, didn't work. No triggers, didn't work. Half a trigger, didn't work, didn't work, didn't work, didn't work. Do you guys see it? I don't point out termination conditions to make you guys upset, to make you guys feel like you can't take trades. But these are textbook. These are just the strongest indication that it's not going to go your way. That's a lot. That's 90% of your day. Well, Mark, how am I supposed to make money? How am I supposed to make money if there's all these termination conditions, right? Maybe for an hour, you're not. Maybe for an hour and a half, you're not. Maybe you made a lot of money right there. Maybe you made a lot of money right there, right? Maybe there was an opportunity over here when the triggers got below. Was there? There was. Everything says down, right? There's a pullback right to an area inside of triggers. Pushes down. Maybe there's a little opportunity for money there. And then there's those divergences again. 3 divergences in the same price range. Here we had the beginning of momentum. It hadn't reached the divergence low yet. It pulled right back to the area inside of triggers, and sure enough, the market went down. Do you guys see it? That's your pattern. It hadn't reached divergence yet. There it goes. I love it. Whoops. For you guys that like NinjaTrader a lot, I did build a TradingView plan. Whoops. That looks just like the other one, but it uses fibs, not zones. Kind of cool. But that's not where I was trying to look. Crude oil. Don't have momentum. Do have a clear path. Don't have an area inside of triggers. Once again, rules for the win. Adam P., what's going on? Good to see you. Let's see what we have. Auto entry. Strong triggers. Clear path on the large chart. There's your entry. Nothing wrong with that. And then your second lower divergence. Yeah. So let's talk about the automated system, Adam. So the automated system doesn't use synthetics. So it looks pretty a lot. That's the perfect trade, dude. 100%. There's a couple red flags that start coming up over here on the small chart. The first one is divergence right from that Fibonacci area. It didn't quite reach it, but we're a couple ticks off. And some of you are saying, well, yeah, but what good's a fib if it's, if I have to worry about a couple ticks off? I want to remind you guys that fibs are created from tens of thousands of calculations. Every swing in the market, every up, every down, every pivot, guys, back 10 days, higher time frames, lower time frames, there are tens of thousands of calculations. So from all of these calculations, the algorithm kicks in and you get this red line. And you missed it by about 2 ticks. Does that make sense, Adam? And that's still, it's a great look. You've got momentum, you got path, you got the perfect entry. I love everything about it. I think the system did a good job on the entry here because you had room to get back just in case that wasn't actually a termination. It's the second lower divergence, and this is the one that John Novak is such a big fan of, to get you out of a trade because it's likely to push lower. And then if you get a little confirmation and it still looks good, you can get back in. So yeah, that is like the crux of what John Novak teaches on small chart advantage or small chart management. And I think, Adam, just for me, if I'm 2 ticks off of a fib with divergence, I'm a little suspicious. You may still take the great entry, but I'm even more ready to manage because divergence from a fib can screw things up pretty quick. And I don't disagree with your entry. I think it's a great looking entry. But yeah, that was your opportunity. Maybe down a couple ticks on it. Does that all make sense? I love the automated system because it finds the perfect entry. Yeah, it is. And off the open, Adam, it's nuts. I don't know how you guys do it. We had a week off. Maybe it was around Christmas or something. And I thought, cool, I get to trade all day long. And when the NASDAQ opened, I couldn't trade it. I couldn't move my stops fast enough. I couldn't move my targets fast enough. And I actually had to just say, no way, I can't do it. So Swathi, what the automated system does is, and watch this. Let me open up, I'll open it up and I'll let you see exactly what it does. But what it does is it goes through and it has a set of rules. And in those rules, let's go to the instructions. We got time, right? The rules are based off of the highest probability trend trade. The rules are based off of a large chart, and it's literally taking momentum, path, and then entry, and that's the wrong one. Here we go. So when you come through it, what it's doing is it's saying, hey, we're going to find the best of the best look on a large chart. We're going to find, that's not giving me all what I need. We're going to find a large chart, and this is important. That's a very key phrase. We're going to find a large chart with the absolute best case scenario for entry. And I'm going to get it all set up here so that I can show you. So when I enable my system, have to put that in there too, and I apply it, what happens is when the rules are met, and I enable it, when the rules are met, it'll give a signal, as long as it's the best of the best. And it looks like that one was a small winner. The second one probably didn't work out. Probably a small chart opportunity over here. So the large chart will be ideal. And notice that there's no trades in here. In a system that looks for the best, there's your short. There's your long opportunity. And again, this would be one of those spots where there was probably small chart situations that may keep you out. So I'm going to scroll back and find that first box. And Adam, this will be good for you. And I love that. I like these teachings. Whoops, there it was right there. So your entry was about right here. And the market comes down. We get two divergences. If you use the pivot, you probably took a small loss on this one. I would take it all day long. Now the second entry would have been on the wrong side of the triggers. We know that to not be a good look. After two divergences, we know that to not be a good look. This is where you're going to have to use a little discretion to say, I know that the large chart is perfect, but my small chart isn't. Maybe I'm going to hold off. And I probably would have been willing to lose that one. At around 10:13, there's your short trade. As given by the system, that short trade is a pullback to an area inside of triggers. Because I can see the small chart fibs, this is my management point. If something goes wrong here, I got to manage it. And then it comes back, turns into another trend trade, continues down. Up top, there's that same look, couple divergences. If you got the first one, you probably made money. After the second divergence, triggers don't get above it. John teaches this. If you're going to try that trade, you want a reversal bar from an area, and it never gave it. So the large chart, Swathi, the system, whoops, and let me do this, has conditions that must be met, and these are adjustable if you want to adjust them. These, you can change these out, but when all of the conditions are true, it'll produce a signal. And when the conditions are not true, you can see how far that went, it won't produce a signal. So it took a while. There's the next signal. It was a short trade. There it was with room to trouble, and it made it right to trouble. Good spot to manage a trade. Does that make sense? So when it produces a signal, it will create a limit order, and it will enter the market. You have the ability to cancel it if you don't want to be in it, but it's only an entry. You're going to use that small chart for a little bit of management. And that's what gets the best results out of the automated system. It does the heavy lifting for entry, but there are things that you need to learn on a small chart to get the absolute most out of it. And we'll see if it gives us one. There's divergence. That's a good one. There's momentum. I love it, but it's going to count triggers coming through, and it's going to make sure that it's ideal. And if it's not, it won't submit a signal. Does that make sense? So maybe we get one, or maybe it takes an hour, because 90% of the day is waiting, and the automated system is no different. I love it. John Novak and I spent months and months and months. Hey, look at this. Look at this. What about this? How does this look? How does this react? Can we add this? We did an enormous amount of work on this thing. And then John Novak did 10 times the work that I ever did, with probably 100 times, with the programmers. And we came up with it. And John swore he would never automate another system because there's so many conditions. And he did it because he knows that with small chart help, it creates opportunity. Don't love the mid-band without a good bottom. I think that's good heads up, Adam P. You had all the momentum. There's your pullback to the area inside of triggers. The auto entry got you in a little higher at 90. Okay, right at the EMA, perfect. Market did everything it was supposed to do, and you were able to exit right there. I love it. It's perfect, Adam. Perfect. Whoops. Sounds like my system caught a trade. There you go, Swathi. It activated it. Perfect entry. Took profits. If it hits my second profit target, well, you've got an ATM strategy in place. So I'm just going to put it just above trouble here. But this all happened while I was talking about something else, right? So now that I'm in, I'm saying, okay, I'm going to take my final profit at trouble. If I get 3 divergences, maybe I'll exit the trade. I'll have to impart a little management. I can even, because I just got a new pivot, reduce it myself a little bit. I've got $140 locked into the trade. It either goes or it doesn't. And there we go. I stopped out. That was $550 the fast way. And I imparted just a little bit of management on it. But look at that entry. That was auto-generated. I wasn't there. That was 100% momentum, path, pull back to the area inside of triggers, and then we use that small chart management. Pretty cool, right? I love it. I heard the cha-ching in the background. And I was like, I'm in a trade. Let's go look. Miss Trina, let's see what you did. Trina, counter trend trade mid-band. Entry after confirmation. Target one made, stopped even money. So why did you go counter trend, Trina? Against triggers, against trend, with very little room to the fib. What inspired you? I'm not going to beat you up. You're my favorite Trina in this room. But you didn't have momentum, didn't have a clear path, weren't trading with the trend. Every indicator was up, and you said, you know what? It's got to go down. Why? And even more importantly, is 3 ticks your highest chance of success? Like, it doesn't even give you time to manage. Your stop had to be 4.5 points. All right. So you know what it is, right, Trina? I'm bored. I'm so bored. And you even had 3 divergences in the same price range, not one trigger through any of them, and a solid wall of support. We've all done it, though, and I'm not beating you up. I don't want to beat you up. But when you do this, And watch how language pays a dividend here. Are you ready? Counter trend from midband. Here's your midband at 44.41. Here's your entry at 40.50. Is that really the midband? No. That's not the midband. Never hit the midband. It just kept hitting termination conditions. But you'll do that, right? You'll do that where you say, this is why I did it. Duh. Stopped out at even money. It made my first target. And oh my gosh, you're fighting everything. So Trina, let's not just say dag nabbit. Let's do this. What's a great way to take that style trade? Because I know in your brain what you were thinking. You were thinking, if I hit that mid-band and those large triggers are a full bar away, price is likely to close that gap, right? And Trina, if you wait for confirmation right from the mid-band, look at how much space you have to get down to those large triggers. And there's no doubt in my mind, this is what your brain was thinking. Your brain was thinking, okay, I can go short and close the gap to the large triggers. The challenge is they were already on you. And I know that because I've taken the exact same trade. Does that make sense? I think there's a time to take this trade. I don't think we quite had it in front of us there. But yeah, like the thought process was good. When am I going to go counter trend? When I've got a gap to close to large triggers and a little confirmation. And then it goes back to the idea, I'm gonna pump the brakes and wait for that to happen. Good stuff. Guys, I'm telling you, you don't have to be right all the time. There's so many lessons in small mistakes. And even if you're like, I made money, I'm cool, I'm all right. Is it the best money? Is it the easiest money? Is it the lowest stress money? Been burned on this when they can't decide, right? Were you thinking up, Trina? Because they were still pointing up, right? And then what did your immediate strength say? Snowball's chance. Pretty cool. So one of the great things is if I can't decide here, I'm going to lean on the immediate strength of the market. And it doesn't mean that there's a short trade, but it means there is no way I'm trying that long trade. Great job pumping the brakes on that one. But that's the wise. This says nothing. This says strong down. I'm going with this until they agree if I absolutely have to be in a trade. Nicely done. Cav, you are killing my OCD, Cav. Who leaves space between charts? I've got some hang-ups. That's funny. I love it. I love this trade. Termination, odds favorable, potential to break, perfect look, beautiful entry, and just Downsville population U. Cav. So to get back to those lessons on the small triggers, here's the other side of the coin. Do you see how you had a full bar to get back to those small triggers? They would have been below the reversal bar marker. Dude, I'm in at the area all day long. And then if there's some sort of nasty little reaction off of them, I've got time to manage. That is the perfect using the area because the small triggers are so far away. I love that one. And then when they're up on you, where was your other amazing picture? There it is. And then the other option is when they are not a full bar away, that's when I wait for the other side. So you kind of you got both right there. Full bar away, beautiful, use the entry. Not a full bar away, get to the other side. Exhibit A's and B's. That's awesome. I love everything about this trade except that gap between the two. Everyone on board for great lessons. And it's a matter of Cav, I've done this and I've messed it up 1,000 times. And every lesson that I share with you guys in this room is a lesson that I had to take from John Novak. And if you've ever been the sibling of somebody as brilliant as John Novak, it's harder. And look at this, no more signals, right? No more signals yet. Still waiting for the best of the best before it comes through. I love making a quick 550 on the auto. And then there is my termination. There's the reversal. There's momentum. Area breaks. Maybe it'll pull back and give a momentum trade. Man, they're just kind of stuck over here, aren't they? They're just stuck. Crude oil's not doing much of anything today. In the S&P, holy termination zones, Batman. You guys think there's a little indecision going on in the S&P today? A fight between buyers and sellers? Have you guys ever looked at this and said, oh, man, it's not easy today. It's not easy. I may have to take the perfect entry without the clear path and manage it if something changes. And there's days that are like that where you're gonna say, I can't seem to get it perfect, I'm gonna take and manage, or you'll say, you know what? Somewhere there's a golf course that needs someone on it that sucks. I could go be that someone. And that's up to you. Those are choices that you guys have to make. But that's the second hour. That's the second hour. When I come back, guys, we'll keep looking at pictures, but what we're going to do is we're going to watch live markets. And we're going to say, hey, if the rules are met per the KISS plan, we'll pull the trigger. We'll manage it. We'll see what happens. And if the rules aren't met, we won't. And it's really that simple. Because my job is consistency, execution of method. My job is not to show off and make you guys believe I'm a great trader, because I'm not going to lie. Whether or not you think I'm a great trader has no bearing on my bank account. None whatsoever. So, you guys want to watch? We'll watch Ninja Trader. Not that one, though. Not that one. We'll watch the S&P and see if they can break out. I'll be back in about 5 minutes, guys. Go stretch your legs again. It's hard to stare at a screen for hours on end. You guys are awesome. New users, I want you to talk louder than the old users right now. I want you to say, Mark, I need help with this concept. Mark, I need you to go over momentum. Mark, why is that a termination condition? Just, even if you don't care what the answer is, get in the habit of posting in my room, guys. The more you do it, the better it gets. Adam, we'll start with your picture when I get back. See you guys in 5. Sometimes I do that, and you guys probably don't even need the lesson, so I appreciate you not going up in arms on it. Some people have in the past. All right, let's see what you did. Auto entry, and there we go. So, so Adam, have you watched John's small chart management videos? Just so I have a point of reference. Okay. Divergence from one-to-ones is considered to be horrible. Divergence from a fib is considered to be horrible. 3 divergences right at a fib is considered to be horrible. This is one of those opportunities where I would probably disable and cancel. Because I have so many small chart challenges brewing. Do you see it? So I know that the system wants to get in here because the system doesn't see all of this that's just happened. And the stop is right in the retracement zone too. So for me personally, Adam, and all I can do is really put my 2 cents in on it. I can't tell you what to do. There's a laundry list of things that'll keep me out of a trade, and most of that list is on your small chart right now. 3 divergences, divergence from a 1-to-1, divergence from right at a fib that the triggers couldn't break. For me, this is a, hey, I'm just going to pump the brakes and probably not take this one. Does that make sense? Or the other side of that, hold on. The other side of that, where was that one? Let me see if I can find yours on my chart. Is that 8:55? Darn these old eyes. Are you in Eastern time frame on your chart? Just so I can find your trade. Okay, cool. So at 8:55. So we were somewhere still back here. Man, that market moves, doesn't it? Whew. Okay, so we were looking right in here. I want to be able to line it up. I didn't get a signal on mine. I may have a different look than you. You're replaying before the market opens. It's just too fast. So yeah, it can be. I think that from right at the open until maybe 11 o'clock, I feel like the NASDAQ is almost too fast for most mortals on Renko bars. So you had a fib. There it is right there. So same look. I've got a little different look on my fib, Adam. But once that divergence from the 1-to-1 right by a fib, once that kicks into play, if I'm still stoked about the large chart look, I can get a reversal bar somewhere in that zone. So on your chart, if you decided, hey, the large chart looks great, I'm really digging the large chart entry, and I see the red flags over here, this is where you can exercise your right. I'll take that entry, but on my terms, with a reversal bar from an area so I can manage risk. Does that make sense? So I think, and this is just me, this is my thinking, this is my opinion, this is my 2 cents. If you're using the auto system, and man, I mean, everything about it looks great, I'm not going to lie, it's a good looking entry. I would make a list of things that will keep me out. One of them is the second lower divergence. And guys, even if you're just on NinjaTrader, you can use these as well. It's for NinjaTrader Swathi, not TV. So, Adam, if you want to take these, but I think if you created a list, if I get a second higher or lower divergence, I'll skip the entry unless I get a confirmation bar, or if I'm in a trade. With the second lower divergence, I'll exit the trade, and I'm willing to re-enter it with a reversal bar, a little bit of discretion. And these are all just short little things that I've written out. Divergence from a 1-to-1, just done. Dunsky, no more. Not going to enter. Not going to happen. There's another one. And then I've got one more. And just reaching areas. When your trade gets to an area, it's all right to get paid. And if you're holding for bigger moves, there's some trigger line study that you can do on when areas are more likely to break. And it involves having strong triggers in the direction still outside of the large. So there's 3 little reading materials for you there. But I would consider, I think, on the automated system, and you could just print this out. You could call it red flags on small chart or Cahart. 1, divergence from 1-to-1s. Divergence from a fib. Second higher or lower divergence. And then just print it out and have it next to you and go, okay, large chart's perfect. Here's my signal. Let me make sure one of these things aren't happening. And it may be a no trade scenario, or it may be with the large chart perfect. If one of these shows up, I'll force the market to give me a reversal bar for entry. No bar, no entry. Does that make sense, Adam? So you're welcome to steal this. But those are some of the biggest key concepts in John Novak's small chart management video that come into play. And it's no different than anything else. When you have that checklist in front of you, you have that awareness right in the moment. Yikes. So let's see what this one is doing. This one took an entry. No divergence from the fib. I have a huge stop in play. I probably wouldn't keep it that big. We'll let it reach it. But without the momentum, I'm not sure exactly what my settings are on this. There's your reversal bar if you wanted to reduce risk, if you chose to stay in the trade. And then, of course, off it goes. I don't know what my settings are, so I'm not going to keep running this in front of you guys. But it all stems from momentum, path, and entry. This one had a line outside of the large. It had a clear path. It had room to trouble. And it just didn't work. And sometimes they don't. Even the best entries sometimes don't work. And I think the market tried to take one right there. So we've got about 40 minutes, guys. Small's above the large. Path is clear. Oh, don't ever let it be the last one, Adam. I would want to see your settings on why it took that one. That's an interesting look to me. Because it doesn't really have momentum yet. So on this one, there's a way to do it. And let me see if I can pull mine up. So it was right there. So I didn't get a signal on that one. And let me show you. Let's see if we can find out why. So where yours created a signal, triggers both green is one of my conditions, Adam. Yours doesn't have that condition put in. Small's above the large average. Yours doesn't have that condition in there. Entry bar with a wick. I'm not sure yours would have had that entry in there. So we have different settings. For me, it looks like a continuation style entry, but without seeing your settings, I don't know why you took it or why the system took it. But there's a lot of conditions that I didn't have met on that one. It's a good looking entry, no doubt about that. But you never got those large triggers up. Good trade just does not work, or did I miss something? It has something to do with your settings here, Adam. Mine wouldn't take the trade on it. Yeah, have Jason take a look. What I did on my system is when I put the strategy in, I just said I'm not sure what I want yet. So if you go down here to template and load, I put in John Novak's test for active trader template, and this is the one that has to break the mid-band. It doesn't have to have divergence, but this is the one that he put together for really looking, and it puts the settings in for you. You put your ATM strategy in, but this is the one that gives a little extra freedom on it, relying on small chart management. And I don't know what yours are. So yeah, have Jason take a look and see what he sees, and maybe there's a couple differences in there. But I never got a signal. I did get a short signal here with everything down. That didn't work out. And yeah, always lean on Jason. When you do, or even Adam in the other chat room, you can take this exact same picture, but also take a picture of your settings and drop those in there too. So if John's in the other room looking, a lot of times he'll get you guys some answers in there if he has enough information. Sorry, that wasn't as helpful on that one as you needed it to be. You're welcome. Had a big loss before Ninja fail. Uh-oh. Odds favorable momentum, clear path, pull back to the area inside of triggers. Boaz, this looks like easy money. You won't trade the NASDAQ between 9:30 and 11? I won't either. I will on the minute bars, because a minute is always a minute. But if you look at the NASDAQ right at the open, and everybody wants to be a NASDAQ trader. Let me show you something. Right at the open. I'm going to get there real quick. 27, 28, 29. All right, so there's the open. That is 2 minutes after the open. So let's just see what the first 5 minutes of the NASDAQ did. That's still not it. There's your first 5 minutes of the NASDAQ, guys. That's the open. It's fast. There's a lot of great opportunities, but you got to be able to keep up with them. I'm not that gifted, because if I take this long trade, I had 4 seconds to adjust my stops, to take my profits, to get things in place. So know your limitations. And if you're not there yet, it's okay to not be there yet. Never gave a signal. There's your termination condition. Only 2 triggers through. Adam, I love the NASDAQ from about 11 Eastern until close. I think it's super smooth. I think it feels a lot like the S&P. I also think pre-market NASDAQ is pretty darn smooth. And please, anybody feel free to correct me. But about 2 hours, 2.5 hours before the open, the NASDAQ tends to flow pretty well. And then there's just this psychosis for an hour or two, and then it tends to fall back in line. Like you can already see it slowing down. Sunday from 6 to 8 p.m. I've never even thought of trading Sundays. Good stuff. Guys, we have a lot of time. Triggers are down. Weak side of the triggers. I do have room to trouble. What would I need here? I would need a down bar that closes on the correct side of the triggers right from the mid-band. And if I don't get it, there is no trade. Good stuff. And look at that. It's just not giving it. There is no trade. Oh, you want the template? I got you. And then Boaz, that's me with the smooth brain. I don't. Let me find it real quick. I just don't believe you need as much information on a 15-minute chart to be successful. There you go. And guys, it's the same look as it is over here. It just has fibs on it. But you don't need large triggers to define momentum. You don't need large triggers to help you define the trend. Not on a 15-minute chart, guys. It's just too slow. So Boaz, that's just my little, I really like trading view. And I really like NinjaTrader. So I just combined them. All right, what do we see, guys? Odds favorable momentum. 3 out of 4 triggers through. We're getting close to those 1-to-1s. We missed them by a tick. Before we ever get a reversal bar, can we say without hesitation, if I get a pullback, the market's most likely to bounce somewhere in the area right here? If you're on the KISS plan, that divergence says no trade. If you say, but it's coming from a good bottom, I have all the momentum, there's room to trouble, some of you are going to activate a limit order a tick or two above the highest point of support. You're going to know without question, if you get filled, your stop goes where the market shouldn't. And the only thing you're not in control of is whether or not you get the fill. Does that make sense? But watch this. Before it ever pulled back, this is why I say you can call your shots if you learn the language. Before it ever pulls back, I know that my entry comes from an area inside of triggers. And as the market moves forward, even as the triggers move, even as the areas go and fall outside, I still know. And it changes constantly. And there's the reversal bar. And before the reversal bar ever prints, because I learned the language, I know exactly where I want to take an entry. And now price reached yellow 1-to-1s on the large chart. And no triggers have broken through. Do you guys see it? Price reaches an area. Triggers don't break. That's a textbook termination condition. For me, that's no more long trades. Never got a close on the correct side of the triggers. Never got in a losing short trade. If you took this one, it went down all the way to support, and that's where the market started back up. Kind of cool, right? There's your trade entry. Down it goes. We do the same darn thing every day. Do I have momentum? What's the direction? Is there room to targets? I've got momentum. I've got a clear path. What don't I have? An area inside of triggers, 2 out of 3. What does that mean? I can't define an entry. If it pulls back to the mid-band, I'm already on the wrong side of the triggers. What can I do? Insist on a reversal bar to get me into that trade. Insist on a reversal bar. to get me into that trade. And if I don't get it from the area, I can sit on my hands because it may go lower. Does that make sense, everybody? You guys are getting quiet in here. Are we sleepy? It's the same stuff every day. What does my large chart say? Can I define an entry based on large chart advantages? Large chart has 2 triggers through, potential to break. This is what happens when a market consolidates for 4 hours. The break's typically a pretty good one. Doesn't mean that there was money in there for you. Guys, what would you like to talk about? This is the part of the day where I'm about to just mute and wait for questions. New folks, how are we doing? How you feeling? If you've been with me 3 or 4 days, does it make more sense than it did on the first day? Maybe you're going into day 3, day 4, and you're like, yeah, totally trigger lines. I see divergence. That's an area. Still 1 trigger line away from a clear path. I hope. Nobody? Cool. Now my triggers are rolling, right? If they actually roll, I'll be on the strong side of them, looking for a potential long. If, with 5 minutes and 35 seconds left, guys, if this market crashes down, these triggers will have never rolled up. So if I'm in the I don't know stage, I'm going to lean on the immediate strength to help me pick a direction. All right, I'm muted. Post them if you got them. Ask it if you need help. All I had to do was say it. All right, Boaz. 3 triggers through. Losing momentum though, right? Pulls back and you say, I'm not going to fight the small triggers, not when it's not perfect. I'll get in on the good side of the triggers and see if we can't continue up. I love it. Great trade. Boaz, that little bit of patience seems to really be working out for you well. Good. That's what we do here, guys. All I have to do is see what you're doing. And if I know a way to do it better, I'll share it with you, I promise. And I'll never chastise you in the room. I've got your phone number. I'll call you. Ask you what you're doing. Has anyone ever gotten that call from me? Probably not. Swathi, if I send you a nickel, will you start annotating your charts for me? If I send you money, okay, so I needed to hear that. How are you taking pictures? What are you taking pictures with? What program do you use? Snipping tool. All right, you ready? Let's do it together, Swathi. Let me open up my snipping tool. And let me snip. So you're taking this picture right here. I love it. The challenge with the snipping tool. Whoops, get back over here. The challenge with the snipping tool is it doesn't have a text. Oop, hold on, text actions. What does that mean? I don't know. So Swathi, let me show you what I had to do. And I don't have any experience with snipping tool. If you click Edit in Paint right here, it'll bring it up, and now I can use the text. So I can come in here and I can say, triggers were not strong, small had returned, path was clear, 100%. Is that how you read it, Swathi? Cool. So entry rules say buy a pullback Add an area inside of triggers. That's what the rules say. The entry says jump in, not at an area, and hope it goes up. Does that make sense? So you got a little excited on your entry. Do you see how it doesn't fit the entry rules? And even more so, even if you got to pull back to the areas, do you see how they're... Okay, but that's part of it. There's one key word, Swathi, that you're leaving out of it. Your entry is inside of the triggers. Your entry is not at an area inside of triggers. Thank you for saying that, because that's our fix. That's our fix. You read the large chart perfect. I'm not going to save it. Tail into momentum, absolutely clear path, but without an area inside of the triggers, it becomes a little bit of a guess. And Swathi, my wife, took the exact same entry 20 times before she finally said, "Why do I keep getting run over, Mark?" Because she didn't show me her entries. You at least have the courage to show me your entries. So embrace that phrase. Buy or sell a pullback. And guys, I promise you, if you write this down on a piece of paper, you'll never miss your entries. Buy or sell a pullback. That's the push down. Let's get it all out. Add an area at a fib, at a mid-band, or a 1-to-1 inside of triggers. And Swathi, it was one little word. It was one little word that did it. Does that make sense? Swathi and everybody. And then what you get into, and we'll go look and see how this worked out, is Swathi, when you know that recipe, you might say, and I would say on this one for sure, my large chart is great, but my small chart doesn't define an entry. Does that make sense so far, everybody? Large chart looks good, but on my small chart, I can't define the entry because I don't have areas inside of triggers. So what a lot of people will say is I'll wait for a reversal bar up from the area because then I can put my stop behind it. So we fixed a couple here, without a doubt. Great class. Thanks, Calf. Man, have a good one. And amen. Veterans, thank you for your service. So let's go see what it did, Swathi. I love going back and taking a look. Was that crude oil or S&P? I forgot to look. That was the S&P. So I had fibs, but but this was it right here. Let me get, we won't even look at the large chart. So there was your pullback. I had a fib. You didn't, but the pullback went beyond it. So right here, Swathi, this is where I would say, if I get a reversal bar from that area, I might give it a shot. And that's kind of my last line in the sand. We had different looks because of different time frames. So because the large chart's solid, everything looks good, just right here, I'm like, okay, give me a reversal bar, I'll take the trade. And you can see that it never gave the reversal bar. So you just don't take the trade because you can't really define your entry. There's no place to put a stop. So when it prints a reversal bar, what I'm saying is, let's see if we can find an example of it. You're not really jumping in. So watch this. And let me find an example. I'm looking for one that gives me a little bit of room. All right, Swathi. So here's a great example. I want to take a short trade. You see the small chart? I'm thinking, heck yeah, all of my rules are met. Life is good on the large chart. I can't wait to take a short trade. But I don't have any areas inside of triggers. Do you see that? So we'll go through it kind of bar by bar. Because I can't fit the exact recipe, because I can't say, and I'll put text on here. I never do that, but we'll do it. Whoops, come on, text. Can't tell you the last time I put text on a chart. Because I don't have an area inside of my triggers, can you tell that I don't do a lot of text? Because I don't have an area inside of my triggers, I'm going to force the market to give me one of these reversal bars. So areas inside of triggers, great question. Let me show you exactly what that means. So first we have to define the areas. So what's an area for a trend trade? I'm going to the actual one that I teach every morning with. And I'm going to close it out on accident. So this is your entry sequence, Swathi. When the large chart rules are met, small chart's going up. Are you comfortable with that? And that's what it looks like when you decide to take a trade, right? So then the reversal bar prints, and that says, hey, the market is likely to push down. Do you see the triggers? Large and synthetic. There's a top line and there's a bottom line. Are you with me there? So in order to have an area inside of triggers, I think you just had the moment. It has to be below the top line and above the bottom line. So the area has to be in here, whether it's a fib, a midband, or a yellow 1-to-1. And it's these areas right in here, Swathi. This is where the market is most likely to bounce and continue. So if you take an entry up here, it's likely to go lower. And if you take an entry from the wrong side, it's likely to keep going. So what we ran into on that one was because the areas are not inside of the triggers. Does it make sense now here? I love this lesson because what you're doing is you're about to get so accurate. Because I don't actually have an area here, what I can do, is let the market keep making up bars, right? Just let it keep making up bars and don't get in. And then once this down bar prints, Swathi, I'm just going to hit sell market. And I'm going to put my stop behind it. And what it does is it says because the large chart is really nice, but the small chart isn't perfect, it is my right, and it is your right, to force the market to provide an up bar right from that area where I'm hoping it holds. Does that all make sense, everybody? I love this lesson, Swathi, because I promise there's about 10 other people in the room that needed it. I needed it at one point too. So no areas inside of triggers. Once again, you're so welcome. And look how it doesn't give a reversal bar from it. No trade. Keeps you out of trouble. And it's that language, area inside of triggers. And now as we go up, 2 triggers are through. Where are the areas inside? Well, there's a midband, there's a fib, there's another fib. So now because I know the language, area inside of triggers, if I choose to take this trade, rather than jumping in up here inside of the triggers, I'm going to let it get to one of these areas inside of those triggers. I love that lesson. Thank you for that. I hope that all made sense. All right, triggers turning up, strong side, room to trouble, strong triggers here, and you just jump in above trouble. You say, you know what? With everything going up strong, I'm going to jump in and I'm going to get out at trouble. Nicely done. For you guys that aren't waiting for the pullbacks, that's how you do it. That's how you do it. Strong everywhere and hope for the best. Nicely done, Andy. Welcome back. Welcome back. And then Boaz. Momentum. Not quite a termination because the large triggers aren't a full bar away, Boaz. Market comes back. You get in. Small triggers behave as resistance. And when you get to the close on the correct side, that's when it goes. Great lesson again there. Great large chart read. There's your pullback to the area, but the small triggers are close. And for those of you that trade crude oil in the S&P, this is only a NASDAQ thing. And it behaves exactly as resistance behaves. But once you get to the weak side, it is just up. It is all up. Should have waited longer for the bar. That's the hardest thing you'll ever do, guys, is wait. The most difficult part of trading is sitting still and waiting. But if you know your rules, if you know exactly what you need to see, exactly where you need to see it, guys, it takes all the stress out. You've got 8 bars of nothing to do, right? That's divergence from a fib. That's not my trade. It's not even 2 triggers through. If this market goes up, it can go up without me. That is not rules met, not any of them. So another good example, momentum, path, no areas inside of triggers, second lower divergence, never get a reversal bar, no reason to enter the trade. I don't think new users understand how in control they can be. I don't think new traders realize that nobody could ever make you pull the trigger. You're so welcome, Boaz. Nobody can make you pull the trigger. Nobody can make you enter the market if the rules aren't met. Nobody can make you hold forever, even though you reached areas, guys. It's all on you. And once you learn not just the rules, but the language of the rules, life gets really easy. So these are the checklists for both platforms. Strong triggers on the large chart. Say it out loud, and it's either a yes or a no. And if it's a yes, and only if it's a yes, I say there has to be no termination conditions on the large chart. And if it's a yes, and only if it's a yes, only if it's a yes, area for entry inside of triggers on small chart. It's very specific. And if it's a yes, I've never had anybody answer yes to this checklist truthfully and present lower than 70% winners, ever. 50-50 area, not broken, from a strong top or bottom. If it's not a yes, I'm done. But if it's a yes, strong triggers on the 13-2. If it's a yes, strong triggers on the 5-1. If it's a yes, no divergence on the 5-1. Here's the hard part about trading, guys. If it's a no, I won't take the entry. Everything that you do can be so mechanical. Everything you do can be 100% rooted in a pattern that has been proven to win more than it loses. And when I don't have an area inside of triggers, my edge is gone. My advantage is gone. I can't tell you whether to take that trade or not, but I can tell you you're more likely to lose it than win it. Once you believe that, you're less inclined to take it. Is everybody amazed and bewildered that the market did in fact bounce right inside of the box that you drew? Went right to the bottom of the retracement zone, didn't it? Pretty crazy. It's like having a magic 8-ball, guys. Like having your own mind reader. Pretty cool. Pretty cool. What else do you want to talk about? I'm gonna